What if the biggest financial decision of your life was also the biggest lie ever sold to you? Not by a con artist. Not by some shady salesman in a parking lot. By your parents. By your government. By every financial advisor, every bank advertisement, and every well-meaning relative who ever sat across from you and said the words that millions of people have accepted as absolute truth. Buying a home is the best investment you will ever make. It is not. And once I show you the math, you will never look at a mortgage the same way again. The homeownership dream is the most successfully marketed financial product in human history. Think about how deeply it is embedded. It is not just advice, it is identity. Owning a home means you have made it. It means you are responsible. It means you are building something for your children. Renting, on the other hand, is throwing money away. Everyone knows this. Except it is not true. And the people who benefit most from you believing it, are not you. Banks benefit. Every 30-year mortgage generates more interest than the original loan itself. A $300,000 home at 6% interest over 30 years costs you over $640,000 total. The bank collects more than $300,000 in interest alone, more than the house was worth when you bought it. Real estate agents benefit. They collect 3 to 6% commission on every transaction. The government benefits. Homeowners are stationary. They pay property taxes every year without fail. They are invested in the stability of the local economy. A nation of homeowners is a nation of people who cannot easily leave, cannot easily protest, and will vote reliably to protect the value of what they own. You are not being sold a home. You are being sold a cage with a mortgage attached. Before we go further, we need to agree on a definition. An asset puts money into your pocket. A liability takes money out. By that definition, your primary residence is almost never an asset. It is a liability dressed in the costume of an investment. From the day you buy it, your home takes money out of your pocket. Every single month. Mortgage payments. Property taxes. Home insurance. Maintenance and repairs, which experts estimate at 1 to 2% of the home's value every single year. Your home is not generating income. It is consuming it. Consistently, predictably, and permanently. But it goes up in value. That is the counterargument everyone makes. Let us look at what that actually means. The Case-Shiller Home Price Index found that after adjusting for inflation, U.S. home prices rose by an average of just 1.1% per year over the past century. 1.1%. That is less than a savings account. It is dramatically less than a stock market index fund which has historically returned 7 to 10% annually. When you subtract the mortgage interest, the taxes, the maintenance, and the insurance, most homeowners have actually lost money in real terms. The house felt like it went up because the number got bigger. But the dollar got smaller at almost the same rate. You were running on a treadmill and calling it a marathon. Now let us destroy the second myth. Renting is not throwing money away. It is paying for a service, housing, at a transparent, known, fixed cost. When your rented apartment needs a new roof, you do not pay for it. When the boiler breaks, you call the landlord. The flexibility of renting has real financial value. But more importantly, consider the opportunity cost. A 20% down payment on a $400,000 home is $80,000. If that $80,000 had been invested in the stock market instead, it could be worth over $370,000 in 20 years. Almost no one ever calculates the wealth they gave up by locking that money into an illiquid asset. A home can become an asset under specific conditions. If you rent it out and it generates more income than it costs to own, it is an asset. If you house hack, buy a multi-unit property and live in one unit while renting the others, you can turn the equation in your favor. The problem is not real estate. The problem is the cultural myth that your primary residence is automatically an investment. It is not. It is consumption. Here is what the people who actually build wealth understand. Your home should be the smallest, most functional property that meets your needs. Not the largest one the bank will approve you for. Every extra dollar you put into a bigger home is a dollar that is not compounding in productive assets. The wealthy buy assets that pay them. Then they use the income from those assets to live wherever they choose. Separate where you live from how you build wealth. They are not the same decision. The homeownership dream was not designed for your benefit. It was designed for the benefit of banks, agents, and governments. That does not mean you should never buy a home. It means you should buy one with your eyes open, knowing exactly what it costs, and what you are giving up. A home is a place to live. A sanctuary. A place to raise children and build memories. Those things have real value. But they are not financial returns. Drop a yes in the comments if you were always told buying a home was the smartest financial decision you could make. And subscribe right now, because next week I am going to show you the exact assets that actually build wealth. The ones the bank never mentions. They sold you a dream. Now you know the price of it.